Here we see the tension and the question. Gold is near record highs. Silver is waking up again. Some investors are celebrating. Others are nervous. And one question is quietly spreading across Wall Street. Are gold and silver about to break higher? Or are we standing right before a crash? Here's the problem. When prices are low, nobody wants to buy. When prices are high, everyone suddenly becomes an expert. If buying high and selling low worked, most people would already be rich. But smart money doesn't react to headlines. It reacts to data, especially one source of data that moves everything: the Federal Reserve. Stay until the end, because the final insight explains how wealthy investors prepare for both outcomes. Without guessing, why gold and silver are moving high now? Gold and silver don't move randomly. They respond to inflation expectations, interest rates, currency strength, and fear. When inflation rises faster than savings grow, people look for protection. That's when gold and silver shine. Cash quietly loses purchasing power every year. Most people don't notice until it's too late. Silver adds another layer. It's not just a store of value, it's also an industrial metal. That makes silver more volatile, but also more explosive in the right conditions. Fed data. The real driver. The Federal Reserve controls one powerful lever, which is interest rates. When rates rise, bonds become attractive. Gold usually struggles. When rates pause or fall, the dollar weakens. Precious metals often surge. Right now, the Fed is walking a tightrope. Inflation isn't fully defeated. Growth is slowing. Debt levels are massive. If the Fed had an easy job, markets wouldn't move this much. Every signal from the Fed becomes fuel. One sentence can spark a rally. One hint can cause a sell-off. This brings us to the biggest fear investors have right now. First scenario. A crash scenario, yes. Gold and silver can correct. Here's when crashes usually happen. When rate cuts are delayed. When inflation reaccelerates suddenly. When investors pile in emotionally parabolic moves, often invite pullbacks. Most people buy when they feel safe and sell when they feel scared. That's backward. A correction wouldn't mean gold or silver failed. It would mean the market is resetting expectations. But here's what most people completely ignore. Second scenario, the new highs. Scenario gold and silver don't need perfection to rise. They need falling real interest rates, long-term debt concerns, confidence erosion in fiat currencies. If rate cuts begin while inflation remains sticky, that's historically bullish for precious metals. Silver often lags first, then moves faster than gold. When silver moves, it rarely moves quietly. This is why institutions don't ask, will gold crash or rise? They ask, how do we position for both? In 2026, current situation is getting worse due to 1. Wars, 2. Tariffs, 3. Overbought markets, 4. Global reset. So what comes after the hype? War, overbought markets, and the big reset. Here's where most investors get emotional and where smart money gets patient. Markets don't move in straight lines, they move in cycles. Right now, multiple warning signals are flashing at the same time. First, global conflict risk is rising. Economic collapse stories like Venezuela, prolonged war tensions such as Russia-Ukraine, strategic pressure building around China-Taiwan, escalating U.S.-Israel versus Iran risk. These are not headlines for clicks. They are macro stress events, and markets eventually price stress in. Second, markets are already overbought. When too many people rush in at once, price moves faster than reality. That phase never lasts. What usually follows isn't a crash overnight. It's something quieter and more dangerous. A slow transition from overbought to oversold. And that process often takes months, not days. If markets only went up, everyone would be a genius. So, complete road plan in gold and silver for 2026 is Q1 to Q2 2026. fake pumps and dumps. In Q3 2026, extreme volatility in market means price sudden goes up and down. In Q4 2026, extreme pressure will take place. This is best time to buy dip, especially in OCT 2026. Oversold markets don't feel exciting, they feel uncomfortable. But history shows one thing clearly. The best buying windows come after patience, not after hype. Gold, silver, quality stocks, and strong assets don't reward people who chase headlines. They reward people who wait through volatility, keep cash ready, buy when others are exhausted. Finally, the principle that decides everything. Markets will always move. Prices will always swing. But wealth is built one way, through time and compounding. Small allocations, held consistently, across cycles. That's how gold rewarded patience historically. That's how disciplined investors stay wealthy. The biggest regret isn't buying before a crash. It's never owning anything at all. Most people wait for certainty. Millionaires prepare for probability.